Welcome back to Market on Close. I'm Sam Vardis on the floor of the New York Stock Exchange. Joining me here on the floor is Peter Tuchman, Senior Floor Broker at TradeMass. All right, so we did see a bit of a rebound later in the session. So what were your takeaways from what we saw today, Peter?
Look, you know what? Look, I mean, everybody started talking about the fact that there's no follow-through on the rally from the fact that we do have a deal in the works for the government. You know, the market did not react appropriately. It seemed, to the shutdown, and they're not responding to the closing down of the shutdown. Because you would have thought, historically, when you have the anticipation of the government, we haven't had that many of them, the market would sell off, and it really didn't. It was almost very muted, the response when they shut. And then to have this government shutdown for such a long time, and we were literally trading in the dark for a month. And even, I don't think we've ever had as much of the last Fed meeting when he did cut at 25 basis points, and he did say that there's no surety about a December cut, seemed very odd to me. I think that was really a bit of a poking the bear or him against Trump, which he usually doesn't do. But because why would you say that when, we saw last week the Challenger came out and said, we haven't gotten any economic data for a month. And then I guess Challenger is one of the news agencies or whatever came out and said that 1 million jobs, there were 1 million layoffs last year that nobody really knew about or whatnot. The market responded to that. So look, we had a nice, really beautiful recovery rally yesterday. Yeah. We were up 90 or 100. Sorry, we were up 100 and
just turn it up. You're good. You're good. Take your time.
We were up 105 handles off that news. That's quite significant, right? I mean, it was really, we had never seen a big sell-off over the closing of the government, so we saw a nice response on the bounce back.
Yeah, we certainly did. I mean, at least putting aside for a day the AI sort of valuation concerns. Right. But what do you make of all of this now, seeing as tech was largely on the back foot today? I mean, you have this whole SoftBank offloading the Nvidia stake, which maybe is raising a few eyebrows. You've had some very sort of influential sort of voices weighing in on this. I mean, you had the Michael Burrys of the world. I'm sure you saw it taking to X as well, calling into question the hyperscalers about overstating some of their earnings as well. What do you make of this? I mean, how do you sort of cut through all the noise that we're hearing?
You know what? Look, I really kind of just... There's such catastrophism, the response of mainstream media and just the general investment community. When someone is asked for their opinion about something, they really give it. And now they should almost not give it. I try to be non-opinionated and just kind of look at how the market reacts to it. That same SoftBank CEO who just said that he unloaded all of his Nvidia stock is the one that 3 weeks ago said that Nvidia, which was in February 2023, was at 108. 24, it was at 900. Yep. It went to 1,200, split 10 for 1, and is trading at $200 post-split. He feels even at these levels it's an undervalued stock. So if that's what I listen to, not the fact that he sold his stock. I don't know why he sold his stock, and whether he was raising cash or whatever his interest was, but that was an important thing for him to say. Because that's more of a fact than what he does with his money. The fact is that, commitments by Oracle and by Microsoft and by Meta and Google into the 600 billions of all of them into this AI space and into the data centers and into the chip thing, right? And then deals with rare earth minerals and all that, which is all necessary to make this all happen. That's kind of what I'm looking at. I'm not looking at what individuals are doing, because that's going to just move the market in a sort of in an opinionated way. The market tells me what it thinks of this information, right?
I mean, Masayoshi Son and Jensen Huang go way back. I mean, they've got a really sort of colorful history, haven't they? I mean, Masayoshi Son has stood on stage and said that, Nvidia was the fish that got away, off the back of, previously selling his big stake in that company. So what's the next catalyst then? I mean, what's the biggest in your mind, Peter? Is it Nvidia next week, or is it the deluge of official data that we're going to get and the Fed?
I think it's the deluge of official data. I think that's really the most important thing. Because, look, you saw what happened with Palantir. Palantir came out with stellar earnings, and the stock was down 9%, and it took the market with it. Now, why is that? Are we looking as... people have the gall, in my opinion, to say, oh, that's either the top or that's a sign that it's a bubble and all that kind of stuff. The stock is already up 150% for the year. It was a $30 stock, a $70 stock. Now it's a $200 stock. Eventually, it's going to, even if you have blowout earnings, for it to actually go higher on those, and it also ran up into earnings. when you see stocks run up into earnings, you're going to see buy the rumor, sell the news type of a approach to it. So look, the economic data is significant because that's going to affect what the Fed does. The fact that he gave us a little bit of a pushback, because that was the most significant thing that happened out of that last meeting, was he said we're holding at 25 basis points, but at 2:30 when he started his news conference, the first thing out of his mouth was December is not a surety on the cut. He had never given us that impression in the last meeting. So all these big fund managers and everybody were already negotiating their interest rate sensitive portfolios. And a lot of these guys are already closed their books for the year. Right, so you think about it. We're in a new world here where there's so many different tranches of people in the market.
Right.
There's 50 million new retailers. There's a lot of the big money investors. They're funds. They're people who used to be buy and hold that are now actually trading.
Yes.
So it's hard. Your normal reaction to good earnings, it goes up. Bad earnings, it goes down. Economic news, its reaction is how the Fed. It's not normal anymore. We would rarely see. You know what I'm trying to say?
Yeah, there's some very interesting dynamics at play right now. What if the Fed hasn't got enough information because the BLS hasn't been able to actually collate some of these surveys and these data prints properly because they've been somewhat offline, and then you hear Powell come December say, look, we're not comfortable just yet, and they sit on their hands, as some people out there in the market do anticipate. I know the market's pricing in currently 60% as far as the rate cut bets are concerned, but there are some out there that do believe that maybe they'll hold. Do the markets throw their toys out of the pram?
What a great way to put it. You know what? I think the market would not like that. I think the market is positioned for a cut. Right? Well, think about last year. Where sometimes the Fed overplays its cards, and then sometimes the market overplays its cards. Last year, we talked about the cut all year into. We should have probably had that cut in July. That was a missed opportunity. This is last year.
Yep.
And what we ended up seeing was all that happened around the August 6th sell-off of the Japanese stock market, the carry trade, and all that disaster. We finally we come to September. What does he do? He gives us a 50 basis point cut. Right, it was a shock and awe moment. The market responded with a 1,000-point sell-off. Right, so this time I was sort of anticipating that he would have that the first one or the second was going to be a 50, because I think that's what the market needs. It needs a bit of a shakeup. I find it baffling that in the world of 2025 with all the AI and all this stuff that we can't really get the info. I know it's funny. People should understand that the way we get those numbers is still so archaic. Yeah. It's actually a survey of 600 people, right, that give us some of these numbers, right? That's why they always have to be readjusted, right? Don't you think at this point in where we are in AI and all this stuff, we should be able to get those numbers at a snap, right? That information, which is so ironic, so sensitive, that we're so sensitive to, right? The economic data, the unemployment rate, the CPI, PPI, all that other stuff is so significant. And for me, at the end of the day, so much of it seems wrong. They readjusted at the end, right? I mean, think of it. We had that readjustment of 883,000 jobs, that year-over-year number that came. Like, we're readjusting that much, so that means all along we've been reacting to numbers that were really not right. I mean, so you know what? At the end of the day, you look at valuations, you look at the companies, you look at the sector, and you buy or sell based on that. Mag 7 and all those names are still in, as Dan Ives says, we're in the second inning of a 9-inning game that's going into extra innings. We're in the middle of a revolution. It's got trillions of dollars in CapEx being spent by everybody. We are going to be running to build new data centers everywhere to try and make up for that. When you start to see all the big guys monopolizing all the supply of these GPUs and stuff, they're all getting very chummy with each other. You notice that, like, you know what? I'm going to give you this money as long as you secure me that much supply of, when you start to see that monopolization, then I think you just realize that there is a real demand. The numbers are real, and I don't react to this is all chatter.
Even with the AI story very much driving these markets to these records that we've seen this year, the second person I've spoken to today that says the jobs data and the inflation is going to actually be the biggest story and the catalyst. It's interesting. Peter, always a pleasure. Thank you so much.
Thank you so much.
All right,
Have
that's
a great
Peter
day.
Tuchman there from TradeMass.